Hi traders! So, in today's video I will share a secret strategy with you. A secret strategy that you can learn very quickly and you can just start to use it and try it out on your own. This strategy contains moving averages, and especially I will talk about the weighted moving average, which is my favorite one of the moving average family. But first, let's talk about birds, because birds are really important for the environment and you have to love them because they are just so beautiful, and yeah, so just love birds. Now let's start this video. I have a candle, and a candle is just crucial for to understand the markets and the heartbeat of the prices in the forex markets. So I brought you the light that will give you the knowledge. Now, what does this video contain? Weighted moving averages and simple moving averages. Now, this strategy is all about trends, because trends are your friends and you have to love them too, because you have to love your friends. Now, weighted moving average is, I think, the best moving average that you can use in your trading, especially because it is a bit different than the moving averages that you use in your trading, like the simple moving average or the exponential moving average. And the weighted moving average uses volume. And if you want to use a strategy, if you have a strategy that is heavily dependent on volume, I recommend to use the weighted moving average instead of the other ones. And so let's start this strategy. This strategy is about one simple and one weighted moving average. Now, what you can do with this strategy? First, you can identify emerging trends. Now, what does it mean? It means when a trend just starts to grow and starts to just be shiny, you can take a look at the charts, and when the weighted moving average crosses below the simple moving average, you have to imagine that there is an emerging trend that might continue. Now, the second thing is that you can do with it is to identify a trend that is already a trend. How you can do it? It is very easy. It is just a simple rule, and it is the following. When an actual trend is already happening, you can look at the charts and look at the simple moving average and the price. And if the weighted moving average is between the price and the simple moving average, you are a winner, because it has a high chance, a higher than 50% chance that there is already a trend, and you can just enter a trade and follow it. But don't be fooled by the pullbacks, and all the support and resistance that it might break, and be careful with the client sentiment indexes like the SSI, and only take the trade in the direction of the trend if the SSI, for example, is below or above. So for example, if you want to trade along and you see that nice trend, but the market is already at an extreme level, so for example 95% of traders trade in one direction, don't take that trade. And this applies to the short trades as well. If 95% of traders are, shorting the market. Don't trade it. And at last, you can identify an end of a trend. So I give you an example. You traded, a good, nice trend, but you don't know where to exit. And most people use only take profits, and they just don't use dynamic exits. But I recommend to use them because the exit strategy is just as important than the entry strategy, and I think actually the exit strategy is more important. So you can close your trade that was following the trend when the simple moving average and the weighted moving average they are just starting to get closer and closer to each other, and they are tighter and tighter. And if this happens over and over again, you can close that trade and you can expect a pullback or a reversal of a trend. So I hope this video was useful, and I hope that this strategy will be useful for you, and I recommend to look at the weighted moving average. And ciao.